Welcome back to the channel. If you're new here, don't forget to subscribe for the latest updates on Bitcoin, crypto, and market trends. In today's video, we have some exciting developments to discuss, from Bitcoin's record-breaking highs to major corporate acquisitions and legislative movements in the crypto space. So, let's dive right in. The Dow Jones Industrial Average has surged by 2,200 points, while Bitcoin continues to break multiple all-time highs. The momentum surrounding crypto is undeniable, and the commitment to making America the leader in this financial revolution remains strong. Staying ahead in the digital asset space is a priority, and Bitcoin is a crucial component of that vision. This is Aaron from Bitcoin Bros, bringing you significant updates on Bitcoin and other developments in the space. To kick things off, let's discuss Meta Planet and their latest Bitcoin acquisition. The company has recently purchased an additional 69 BTC for approximately $6.6 million, securing the asset at an average price of $96K per Bitcoin. Since the beginning of the year, Meta Planet has seen an 18% yield on their Bitcoin holdings. At this point, they hold about 2,100 BTC, representing 1% of the total Bitcoin supply. Over the past year, Meta Planet has consistently outperformed many stocks in Japan and globally. Their commitment to accumulating more BTC remains evident, and with their Bitcoin holdings being verifiable on-chain, any movement of their assets will be transparent to the public. David Bailey has shared insights regarding Meta Planet's strategy, emphasizing that their Bitcoin treasury will expand rapidly now that their flywheel mechanism is in motion. His calculations suggest they may acquire up to 2,500 BTC monthly until their capital plan is fully utilized. This approach mirrors what MicroStrategy Mstr has been executing in the US, and it showcases the potential for other countries to adopt similar strategies. As more corporations recognize the advantages of holding Bitcoin, we can anticipate additional companies integrating Bitcoin into their balance sheets. Now, turning to MicroStrategy, Michael Saylor and Adrian Morris have announced an initial conversion rate for their latest convertible debt offering. The company has launched a $2 billion convertible debt issuance, with an initial conversion rate of 2.307 shares of Class A common stock per $1K principal amount of notes. This equates to a conversion price of roughly $433 per share, reflecting a 35% premium. The offering is anticipated to close on February 21, 2025, which falls on a Friday. Given this timeline, there is speculation that Saylor could be preparing to purchase additional Bitcoin over the weekend, which may positively impact the market. Investors who have been employing a dollar-cost averaging strategy may find this an opportune moment to accumulate Bitcoin or MicroStrategy stock, as BTC is currently trading around $97K, up about 1% for the day, while Mstr sits at approximately $319. For those interested in trading options, Moomoo provides a platform for trading stocks and crypto, including Mstr and Bitcoin-related investments. By signing up using an affiliate link, traders can receive up to 30 free stocks, with each potentially valued at up to $2K. Shifting focus to state-level developments, let's review some legislative updates regarding Bitcoin adoption. In South Dakota, a critical committee meeting is scheduled for Monday, followed by a House floor vote on Tuesday. If the proposed bill is approved and signed into law, the state will be authorized to purchase Bitcoin starting July 1, 2025, which is rapidly approaching. According to Bitcoin Reserve Monitor, South Dakota is considering an acquisition of up to 3,317 BTC, introducing significant buying pressure into the market. Across the U.S., multiple states are progressing with Bitcoin-related legislative efforts. Utah leads in committee approvals, followed by Arizona, Montana, and Oklahoma. Several states are still in the introductory phase, while others have multiple bills under review. Notably, Florida, Texas, and Ohio each have 2 Bitcoin-related proposals, demonstrating growing interest in integrating Bitcoin into state financial strategies. Additionally, a notable development comes from Canaan, a Bitcoin mining company, which has expanded its Bitcoin treasury to 2,319 BTC. The trend of institutional and corporate Bitcoin accumulation continues, reinforcing Bitcoin's position as a valuable financial asset. Before wrapping up, there's an intriguing perspective on the broader financial landscape and the challenges facing institutional Bitcoin adoption. Presently, Google's financial operations would require wiring $1 billion monthly to Coinbase, even as regulatory pressures from the SEC pose a threat to the exchange. Compounding the issue, the only bank currently facilitating such transactions is Cross River Bank, which remains relatively obscure in mainstream finance. Understandably, Google's CFO would hesitate to engage in substantial financial transfers under these conditions. Large-scale institutional adoption requires banking giants like State Street and Citigroup to serve as custodians, providing a level of security and trust necessary for corporations to commit significant capital to Bitcoin. Historically, financial institutions like National City Bank, previously overseen by John D. Rockefeller's brother, have established deep-rooted banking relationships spanning decades. The integration of Bitcoin into traditional banking structures is still in its infancy. Once major banks start offering custodial services for Bitcoin, enabling companies to buy, sell, and leverage Bitcoin as collateral for loans, the financial landscape could shift dramatically. In such a scenario, margin loans against Bitcoin at competitive rates, similar to money market funds, could become commonplace. Imagine a scenario where corporate giants like Apple allocate $50 billion into Bitcoin, benefiting from its long-term value appreciation and yielding returns with minimal risk. However, at present, we are still in the early stages of this transformation. Many publicly traded companies rely on traditional capital assets with limited lifespans, typically ranging between 10 to 20 years. As the structural weaknesses of these assets become more apparent, the case for Bitcoin, with its virtually infinite durability, strengthens. Over time, as corporations transition from conventional financial instruments to Bitcoin, we may witness a significant financial evolution. That's all for today's updates. Thanks for tuning in. Be sure to stay informed as the Bitcoin landscape continues to evolve, and as always, keep an eye on the market for potential opportunities. See you in the next one.